Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from SmartCon in New York City. Joining us for this segment, we have Max Heinzle, founder and CEO of 21X. We're here to discuss building more transparent and efficient market infrastructure. It's great to have you with us. Welcome to Trade Talks.
Thank you, Jill.
All right. And for those who may not know about 21X, what inspired you to found the company and what problems are you looking to solve in today's markets?
Well, I think that, the evolution of capital markets that, has been kicked off with the, say, implementation of distributed ledger technology presents like a world of new opportunities for capital markets. And I think, there's been over the last decade or so, there's been a lot of, talk about how it could disrupt capital markets, but now we're seeing actually capital market infrastructure regulation leveraging DLT, right? And I think this is really now we're at the tipping point, if you so want, at that inflection point where we're really seeing that, things are moving forward, they're going to scale. And I think that in particular with the developments also here in the US, it's super exciting for us, be entering also the US market, because in Europe, we're a bit earlier than in the US. We have market infrastructure regulation, form come into effect already in 2023. Right, we're with 21X, we're the first DLT market operator to actually be able to do something that until today was actually never realizable, and that is to combine primary and secondary markets, running a matching, trading, and settlement system on chain. So kind of like getting very close to the point of actually offering a DEX, but fully regulated institutional grade, and just getting rid of all the inefficiencies, disintermediating what today is still very much so driven and TradFi by regulation. Yeah.
Right. Well, it's interesting because that's a common theme that we're hearing where, okay, we understand what the efficiencies are. Now, how do we extract the value, right, from these projects? You were on stage yesterday at SmartCon. What conversations or trends from the event have stood out to you?
Well, I think that what we are seeing is that after, many years of, theoretical conversations of what could, the technology do and bring to the equation, I think, again, getting back to the point of regulation, now you're seeing, regulators actually, implementing, frameworks, lawmakers, policymakers implementing frameworks that allow us really to leverage DLT. And so in my personal opinion, we call this the Spotify moment of capital markets, because all of a sudden, trade venues that were so far limited in accessibility are becoming accessible, or the transferability of assets, right, is becoming so much more efficient. I mean, here in the US, you have T+1, but that's actually quite advanced. If you look, US being the largest capital market in the world, in Europe, we have T+2. In other places, you have T+X, right? That's for public markets. And then you have private markets. The reality is now we can eliminate clearing, we can eliminate settlement risk, we can, enable peer-to-peer atomic matching and settlement in T+1 second, right? And it's presenting a world of new opportunities. And so there's new use and business cases that are coming out of this, and we could not be more excited about that.
This is why the momentum needs to continue as far as, as it relates to legislation, because you need to understand your operating environment, right? You need to understand your regulatory guardrails, because to your point, it's just going to be a concept until you're able to affect the technology. And you recently announced plans to expand into the US market. I think I know the answer to this, but why is now the right time to do that?
Yeah, and honestly, Jill, I wasn't expecting this, right? I mean, we obtained our license in December of last year, and looking at at the shift of sentiment here in the US under the new administration. I mean, the work that has been done over the last months here, and then the conversations that we've been having with the likes of the SEC and other regulatory bodies to really understand whether it is possible for us to copy paste what we have today in Europe, right, and bring that also to the US, because really our aim is to connect markets globally on a unified ledger, kind of to drive on-chain capital markets, issuance, distribution, trading, settlement, all of that on-chain, right, for all type of product classes, starting from equities, debt, fund structures. So learning that what we are doing in Europe is actually, realizable also in the US with a very different approach, because some of that you don't have in clear, frameworks set out yet, but you have that willingness to provide also for exemptive reliefs. I think that's how the US is really playing catch up now. right? And that's also why the US is going to be, probably again getting ahead of the curve in a very short period of time. Plus the fact US is the largest market in the world, right? European being the second market, the European market being the second largest market in the world. So for us, it was a no-brainer. The moment we understood that it's possible for us to set up shop here and do what we're doing today already in Europe, right? I mean, this is why we, after the conversations that we had with the US regulators, immediately decided to make this move.
Well, it's encouraging to, get the brain drain either back here or welcome, new talent. So we're excited about that. Let's talk about the Chainlink ecosystem and how you work with them. You use their data oracles to deliver the market data on
Yeah.
chain for tokenized securities. How is that integration helping you build more transparent and efficient market infrastructure?
Oh, I mean, look, we are actually, our market infrastructure is running in the first step on Polygon POS. We just announced recently Stellar as a second protocol. We are operating on a multi-chain strategy. So we're gonna be sharing or announcing shortly also other further protocols that we're integrating. So that already becomes a challenge in terms of interoperability and fragmented, liquidity on different protocols. And then us running on public blockchain, even though we have a permission layer, I mean, data is, very transparent and accessible, but still Chainlink is a fantastic partner to help us, also share that data with the likes of their clients and basically support us in getting, the data out there.
Securely. That seems to be a big topic here, data security this year as well. What's the next big milestone that you see for blockchain and digital assets to continue to move forward to the institutional side? How do you benchmark the success of that?
So look, I mean, again, not to sound boring, but now that, regulation is forming, right? You have the Genius Act now in the US, right? Stable coins, clear framework. Then you have regulation also for custody, for brokerage of digital assets, security tokens. So all of that is helping for, the likes of market participants and players to actually, implement also tech in order to start expanding their service and product offering. I think that is, really critical. You need wallet infrastructure to be in place, right? And that you can again see that there is also a shift in sentiment with the financial institutions right here in the US. In Europe, I would say that was already triggered a bit like earlier.
Right.
We've seen, MiCA as in regulating, stable coins and then you have also custody, regulation and other types of, registrar, you call them transfer agents here, right? Regulations. So all of that has been driving adoption and is leading, to actually institutional players, right? And we know institutional players are going to shift the market, right? Even though the largest asset managers in the world, BlackRock and Franklin Templeton, have been driving that lately from or in the first step from the sell side. Now the buy side is actually adding to the equation. And that's when, sell and buy side meet each other. That's when you're actually going to unlock liquidity. And for that, you need market infrastructure.
Absolutely do. Appreciate the insight, Max. Thanks for joining us on Trade Talks.
Thank you, Joe.
And thanks for joining us from SmartCon. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.